Well, welcome back, everyone. I hope you managed to make use of the break because we've got a fantastic panel discussion ahead of us now of great fintech practitioners here in Australia and some that have had good experience in the UK as well. And to head up this session, our moderator is Murray Herbst, who's the Director of Entrepreneurship at UTS. Murray has been a fintech startup incubator person since his teens, he tells me. He's also been one of the early startup people at Fishburners, in fact, headed up Fishburners, which is one of Australia's most successful startup hubs. I've been in there several times, and you met Paddy Crooks the other night. Well, Paddy's, of course, Murray, been on these sessions, a great colourful character and backer and supporter of Fishburners. But Murray's now at UTS, which is the University of Technology in Sydney, and he's encouraging largest but youngest community of student-launched startups at UTS. So a great place and position to be talking to us tonight. Welcome, Murray. How are you?
I'm fantastic. Thank you, Andrew. That's a lovely introduction. I'll try and live up to it.
My pleasure. You've got a fantastic panel, a really outstanding panel of great and experienced, but still very young, I've got to say. Maybe that's just my age. A young panel of great fintech entrepreneurs and investors as well. So I'll let you introduce them. I'll let you run a panel discussion. I'm going to encourage our participants to get involved as much as they can by shooting us lots of questions. Any of those difficult questions, please shoot them over and I'll weave them into the discussion in about 40 minutes time or so. But if there's something that's really bold you want to put in there, just throw it in there and I'll get Murray to ask that of the panel as well. So Murray, over to you. Please introduce the panel. Thanks.
Thank you, Andrew. I'll say really quickly, the reason I do the stuff that I do, so driving entrepreneurship at the university, driving entrepreneurship through Fishburners or Startup Muster and all the other stuff has been because I started a startup when I was 16 that grew for 14 years to 100 million active users as a desktop software product. And I thought, why don't more people do this? This seems quite easy. We need to be doing more companies like this. And some of the work I've done has been with the large banks in Australia. I worked at Westpac for a little while, running their data-focused accelerator program. And that was just wonderful and bizarre to see this 200-year-old company try to dance and figure out new ways of doing things. And they are incredible at being a bank and doing all the things that needs to do in Australia, but not good at doing the things that some of the people, all of the people on this call are really, really good at doing. So we're going to have some fun. We're going to cover the lessons everyone has learned in the companies they've launched in Australia. And I'll ask you, please, to introduce yourselves. You'll do a better job than me, and it's more interesting too. I'll start with Chris, please. Take it away.
Thanks, Murray. Thanks, everyone, for listening in. And happy to I'll join any panel where you call me a young founder. So I'm going to take that. Chris Bailey is my name. I'm the co-founder of an insurtech called Cover Genius. We're one of the leading insurtechs globally. We've been recognised by Financial Times as the fastest growing company in APAC. That was awarded at the start of the year. So it was one of the kind of more more prideful moments of our time. We've won lots of awards in the insurtech space for our technology and which assists us primarily to be the distribution platform for the world's largest e-commerce companies. By e-commerce, we mean anyone transacting online. We have partners all around the globe, including Wayfair, for instance, in the US. Tile is another one recently announced, eBay. We also do a lot in the travel space. We grew our business off the back of a partnership with Booking.com for distribution of travel and car rental insurance. We're also in parametric insurance and lots of other areas. Probably another kind of big call out is around logistics insurance with a couple of the largest aggregators globally in that space. Our team spreads across, I think, about 15, 16 countries. We've got about 150 in the team. and our first few years were bootstrapped. So that it adds interesting context for the conversation today. So I'll hand it back to you, Murray.
Beautiful. Thank you very much, Chris. Linda.
Hi, thanks, Murray, and thanks for having me. So I am also not that young, but thanks, Andrew. I spent most of my time in the UK actually versus Australia. So I was in London from 98 till 2012, worked for UBS, Deutsche, also EY and their corporate finance team, and a lot with government during the crisis, actually, restructurings, the UK Asset Protection Scheme, pulling that together. So I feel like I know the UK, but obviously I'm Australian. Queensland accent is hard to lose. And since being back, I've worked a lot in the fintech sector and currently commercial director at Volt Bank, where we're a fully licensed neo retail bank, pre-public launch with a platform-based strategy.
Beautiful. Thank you very much. Demir, please.
Hey guys, my name is Demir. I'm the CEO and founder of Basic. Basic is Australia's, I guess, premier open banking platform. We work with well over 100 or so fintechs, enabling them to create all kinds of wonderful fintech solutions in the market. Anyway, anything from roundup applications to new ways of being able to accept and process payments, working with a number of neobanks and lenders as well. And not only do we service fintechs, we also service quite a few banks as well. So when we drift between meetings, we're either wearing a t-shirt or we're wearing an actual business shirt.
Beautiful.
Just to add, investors as well. We've got both two major banks that are investors in the actual business. One NAB and Westpac, and we also have Salesforce as well that's recently joined the club, and we've got another fairly large US investor that we haven't disclosed yet as well. So stay tuned for that one.
Fantastic. Okay. Claire, please. No.
Claire's not speaking.
Oh, sorry, Claire. My bad. Asha?
Let's see if I can get this running. Yeah, like you asked, Asha Tan, co-founder, CEO of CoinJar, cryptocurrency startup, started in Melbourne 7 years ago, London-based now. We allow people to buy, sell, and use cryptocurrency as money. Yeah, well, we've launched a UK retail offering maybe about 9 months ago. But I've seen quite a few fintech startups come from overseas into Australia and from Australia into the UK. So I've seen about 7 years of that. So happy to share some of my experiences in that field.
Okay, this is going to be fun. Please throw your questions into the chat. I've got questions prepared, but I think you can come up with better questions along the way based on what you need to know for your companies. I'm going to start with Demir. So Australia has some great fintech activity, but obviously it's got some giant banks as well. Which is not probably an uncommon dynamic, but I think we do take it to the extreme in Australia. How have you found that dynamic in what you've done, and what lessons have you learned along the way?
Cool. Okay. So one thing that's quite interesting about Australia, particularly from my lens, is there's a very decent size company that does something similar to what Basic does in the US, and they're called Plaid. Plaid was able to build a $5 billion business that recently acquired by Visa by selling to fintechs, predominantly to fintechs alone. That concept doesn't exist in Australia, not even close. So I think in terms of and that's kind of quite important to highlight, because what Australia does have is it has a very strong banking sector. So we've got our banks seem to make quite a bit of money. So there's no doubt about it that's where the bigger kind of economic returns do come in. We don't have a lot of kind of, we don't have an infinite list of fintechs that have huge volumes and sizes. And that's purely kind of due to the reason that we're a big continent with a small population, so to speak. So I think it changes the market dynamics quite a bit. It means that kind of what it's kind of meant for us is that, and it's been positive, not necessarily a negative. It's meant that we've had to kind of get to that banking sector a lot sooner than what we would have initially liked to do so. Ideally, we would have loved to kind of have just be able to service the fintechs and be able to kind of work and succeed with them because they're easier to work with, they're more nimble, they're fast, they're quick, good kind of culture fit and so forth. But the reality is that you can't, it's very difficult to make a successful business in Australia just servicing the fintechs alone here. So for us, it was definitely really important to try and get to that banking sector. When you get there, you realize it's, you know, what it would take an average fintech to use our service, you know, a single day to integrate into our API platform with a bank. It's, you know, it's a 9-month pilot, plus another 6 months, hopefully, before they get to production and many meetings along the way. So, but that can be used to an advantage, in the sense that you become a lot more enterprise ready sooner, and your platform evolves a lot sooner as well. So while everyone's been kind of busy trying to service the fintechs, we've kind of had to get more into that lending side of things. That's really important for banks as well, and it's helped us kind of really understand and create a great product market fit there, which we can take to other areas as well.
Beautiful. And it probably is an easy thing once you get into one bank to take that to other banks and have a slightly less difficult process.
There is. I mean, one of the things is that, I mean, you said it earlier. You said, you know, Westpac, 200-year-old bank. You know, one of the things that definitely kind of, you know, made me realize was that the whole bank and infrastructure was designed to be risk averse. Like, it's all about kind of mitigating risk. Absolutely. And when you mitigate risk, it's all about control. It's all about slowing things down and so forth. So I think that definitely kind of changes the dynamic. But so I think it definitely, there is that bit of a snowball effect. You get one, then the other one thinks, oh, well, if they can do it, now we can do it. So it, you know, so it kind of helps de-risk that, and it does kind of bring, you know, bring them across over time. But working with bigger players, a big part is education. So kind of helping educate and of the new ways of being able to do things, of the, you know, capabilities in terms of financial services. But we've had 3 critical events that have forced the banks locally to adapt and change. So we've had obviously COVID. It's been a pretty big precursor where branches no longer make sense. Everything is online. We've had open banking as well, which has finally been legislated and opened up. So now the banks are like, all of the banks are reverse the screen scraping. Now it's like, it's game on. So they're sitting there scratching their head trying to work out what is the kind of strategy behind that. And then the other one for them has been, we've got new responsible lending guidelines that came out late December, where the government actually looked at, you know, we had a really big Royal Bank Commission in terms of the lending and the processes around lending. And the final recommendations read like one beautiful technical specification where it ultimately said, banks, you have to use tech to be able to actually do this. You can't do these things manually anymore. So those 3 precursors have definitely kind of put quite a bit of pressure. And I think there is a 4th one. The 4th one is the vaults of the world. So the neobanks that are applying quite a bit of competitive pressure as well. So they're definitely getting kind of adapt for more lens and forcing them to kind of evolve and act quickly.
Beautiful. Perfect segue. I want to ask Lynn about the kind of dynamics in Australia, and particularly how they compare to the dynamics you saw in the UK.
I think there's a lot of similarities, but there's also a lot of differences. I mean, the UK is a massive market, huge population. There's more competition there, but I think in Australia it's crying out for competition. I mean, you've got 4 big banks. Slight difference in that they are solely focused on domestic market, right? They're not anywhere really outside of Australia. They've tried, but they've retreated. So I think you've got, to Damir's point, a small population, but we've got a sophisticated consumer base. I think the issue though is there's a lot of apathy. Do you know what I mean? Like everyone's trying to digitize banking, but no one's really doing digital banking yet. And that's the goal. And also for a consumer, a retail consumer, it's sort of like, it's still hard to switch provider. It's still a pain in the ass, so you don't. So hopefully with open banking, everything, like, you know, like, and lots of other things, it will become easier. And I think once a consumer can go, right, well, hey, I'm aware that that's a better deal over there and it's really easy for me to switch, then they will. Zinja went to market and acquired a lot of, one of the other neos here, acquired a lot of customers and went out with a competitive rate, you know, and that's great. That's a great news story for them. Unfortunately, obviously rates reduced and they weren't ready to switch it into a lending product. So they had to kind of turn the taps off there. So, you know, there's challenges with kind of timing, but there's definitely, I think, scope for competition. Volt's very much trying to build a platform. So we're about not just having our retail brand and market, but we want to have platform customers where, you know, we don't care if it's branded us, and it's about services, and, you know, via API you call our services, and that may not necessarily be a product. So it takes a while to build though. But I'll just say one other thing. I think there's competition for, and I'm not sure of the makeup of the attendees. If there's, I'm assuming there's a lot of UK startups that have a B2B product. So they're actually looking to banks here as a corporate customer, right? So depending on what your product is, I think there's a lot of opportunity. The banks are slowly, it's, you know, maturing and getting better at, you know, trying. I think there's genuine appetite that they would like to collaborate and connect. Unfortunately, they are large organizations and it takes time, but I think that there's definite opportunity. So I would say, depending on what your product is, really understand the competitive landscape here. Who are your best customers, and you know, and do that research and connect into the ecosystem here, which obviously this session is meant to help.
Okay, fantastic. That actually goes straight to a question that we've been asked, that Andrew has passed me, about the importance of technology in what everyone is doing here. And I'll start with you, Linda, that for Volt, is it about the technology that you're using to do what you're doing, or is it more about the people that you have and the kind of disruptive business model that you're able to produce that an established company is not, that allows you to succeed in what you're doing?
I think it's, I mean, technology is obviously very important, but it's an enabler, right? I think the key thing here is actually understanding what's the customer want, like what are they looking for and what do they need, and they want a better experience, and how can you enable that with technology? And there is so much happening at the moment. And I think a real other key opportunity versus the incumbents is that they have a lot of legacy infrastructure, things sticky taped, managed together, you know, loads of people to migrate, upgrade, retain, you know, there's huge rationalization to happen there. And you have someone nimble, you know, look, we're not building everything. We're open to plugging things in, and we talk to other fintechs and going, hey, that's great. Can we plug that into the platform and cross-pollinate it? You know, we might have other platform customers on the other side. But I think there's reverse economies of scale with software development these days, right? Also, so, you know, what can you build? So I think technology isn't necessarily the starting point. The starting point should be, what's your solution? What are you doing? And then kind of use the best tools and things available and have the right business model to really sort of push that.
Okay, perfect. And I will encourage people that are watching, please fire more questions through, the more the better. And I think that leads to the next question from Chris. Talking of good solutions, Chris, you've established a lot of partnerships in the delivery of Cover Juniors. Can you talk a little bit about what you've seen in establishing the partnerships that you have, and any advice that you might share?
Yeah, look, obviously ours are enterprise software platform. So, you know, to Linda's point, obviously, you know, you start with the customer, things flow from that, but you know, your way to test your bona fides is who's buying your product, right? So for us, you know, we had experienced traditional insurance mindset or the kind of frustration, because we had sat on the distribution side. We went to traditional insurers and we said, hey, yeah, you know, we've got customers from France, customers from US, customers from UK, etc. And we just need one platform for the delivery and one agreement with you, if you don't mind. It was quite a decent book, and the traditional insurers that we spoke to were like, oh, okay, so you want to get coverage for your French customers, then you need to go and speak to Pierre. In the US, you need to go and do a deal with Stan. In UK, you go and speak to Henry. So, you know, you can imagine, like, and we're trying to do a global deal. So that's the point at which we pivoted. We were previously in online travel, and we pivoted to building that platform that addressed those two things. And so, yeah, as I was saying, the bona fides are who wants to use your platform, which ties to what Demir was saying exactly, right? You know, his preference as a fintech is to sell it into other fintechs because you've got the culture fit. It's an easy conversation. You don't have to dance through, you know, dozens of levels of bureaucracy and blockers. For us, you know, we're very clear in what we do. We don't sell into insurers. Yes, we go and do partnerships with insurers, but that's to get supply. It's not distribution. It's not demand side. So, you know, I think what's evolved, you know, at some point, I think several years ago, you know, I came across a really interesting piece, and it was saying that, you know, future of strategic partnerships isn't the way the bank goes about it, right? It's not about, you know, doing, like, if we see an RFP, then automatically, you know, like our success rate is significantly lower, right? Because the RFP process is all about trying to make potential, you know, collaborators or co-creators in the journey and what you're actually building. It's about making them fit into, you know, the round hole, right? So tech companies don't think like that. So we do have the luxury of speaking really to tech companies. And that means, you know, if we're going in and speaking to a partner, then they're like, yeah, cool, you get it. You know, like, you spend all your time thinking about the same things we do. We're B2B2C, right? So we're enabling big B2C companies through a B2B solution, i.e., you know, we have a role to play in how their customer is treated. And we take that extremely seriously, absolutely to the same extent that they do for their own customers. So for instance, our NPS is 65 positive. The traditional insurers that we compete against are like -15 to +10 at the upper range. So there's a huge difference, and the reason is technology underpins everything, right? It automates claims processes. It ensures that, you know, traditional things that happen, like, you know, Bob the claim manager goes on leave and you know, doesn't do any claims while you know, while he's on leave, and it gets stuck. And yeah, you know, these sorts of things always happen, and the way to resolve it is technology, you know, removes friction and makes the whole thing seamless. And you know, we're able to introduce a lot of world firsts into the insurance stack. So the partnerships thing absolutely underpins it, and it takes a very new way of thinking about partnerships. Understand what Linda's saying. You have more experience with banks. When we speak to banks as well for bank insurance products, but you know, that's a very different conversation than what we're usually having with the sorts of companies that I mentioned earlier.
To that point, and I'll throw in a curveball as a result of one of the questions. I'll throw back to Linda for this. I don't think there's any doubt that people can provide a better service with the technology that we have and are developing, but how do you build trust in customers in Australia? How have you found that as an experience?
Well, we haven't fully launched yet, but in terms of some of the research we've done, and even what you've seen with like the example I said before with Syndra, I think there is appetite there. Look, it is hard. I mean, these are people's finances you're talking about. You know, everyone's always very conservative and you know, as I said before, apathetic sometimes about switching provider. But I think that apathy is more to do with it's just too hard. I think, you know, as a neobank versus another sort of fintech provider with a B2C product, at least there is some comfort in the fact you're a regulated bank. Do you know what I mean? 250 grand of your money is guaranteed if we go bust. Do you know what I mean? So there's certain things that I think are there, but I genuinely think the consumer base in here is up for it. They're crying for it. You know, they want an alternative to their existing big bank provider. So, you know, if you can show them something, you can deliver something that they want, and it makes their life easier, yay, bring it.
Okay. Sounds nice and easy. There's probably, as you said, the regulatory environment and the guarantees probably makes life easier and harder at the same time. I'll ask you, Asha, in dealing with the regulators in Australia, how have you found that experience over the years? What have you learned along the way?
Yeah, I mean, it's been a long road. I mean, when we first started, fintech wasn't really a word, let alone, you know, on the regulators' radar. And then, you know, as we go, I was part of, for instance, former treasurer's fintech advisory panel, and, you know, some of the good things that came out from that, you know, the open banking framework, some changes in the crypto regulation framework, and I guess more advocacy for the sector in general. So I do think it has improved, but I mean, if I'm speaking on a very superficial level, Linda's probably dealt a lot more with you know, the quagmire of regulatory scrutiny. But I think compared to the UK, probably not as strong as a mandate internally to champion some of these fintech. I think that's you know, the lack of being helpful or anything. I guess it's taken time for the regulator to understand that maybe fintechs are part of the coming ecosystem, and I think that's just probably recently happened over the last couple of years. I mean, in the FCA, we've had I mean, we've only launched in the UK maybe about since the beginning of this year, but I mean, since early on, I guess the FCA has always been a bit more consultative. I guess just in size as well. They're just much more well-resourced to speak to startups and try to take them forward, as opposed to, you know, ASIC, who, you know, are probably much a smaller organization and probably don't have the reach and mandate as the FCA. So things take longer. I do think, you know, we're getting there eventually, but I think the process and timing of getting to market has sort of slowed down many players. I mean, even in the open banking space. I mean, not to say it was fast in Europe, and, you know, some of these things are still being rolled out, PSD2 or whatever. But in Australia as well, I know people are waiting by the sidelines, hoping, you know, for legislation to go through and more straightforward market entry ways, as opposed to let's set everything up and then we'll wait maybe 9 months, 12 months for a conditional license to approve, which doesn't even guarantee the next 12, 18 months. So yeah, I think it's just a time horizon as much as anything else as well.
We've seen some.
That's the thing. Sorry, go ahead.
Oh yeah, I was going to say we've seen some interesting, you know, interesting kind of observations in terms of the regulators here. There's no doubt about it that, like, if you look at something like open banking, Australia, I would say, has taken probably one of the best approaches in the world, and that's been commented by quite a few companies that operate at a global level, in the sense that it wasn't just about banking, it was about CDR, consumer data rights. So we've got, for anyone who's not familiar with consumer data rights, it's the notion of that every consumer is in control of their data and should be able to freely share their data with whoever they seem fit. So the government went about of setting up CDR first, and then they said, well, the first sector we're going to apply this to is banking. So hence we've got open banking, but they're already kind of kicked off processes for utilities, telcos, there's superannuation, our kind of pension funds as well. There's a whole kind of spectrum of different industries that they're going to roll this concept out to. So we've definitely taken a much more kind of broader approach, and I think it's been good. And the consultation has generally been kind of, I think, well orchestrated. What we still battle with is, like with any other regulators, reducing the red tape. So kind of making sure that they realize it's about innovation, it's not about regulation. And I think that that's the kind of mind shift that they have. So intentions are good, but they have to kind of learn along the way as well how to actually get there.
Open banking has been fantastic. Kicking and screaming, I think, is probably some words that are appropriate, but it's happening. It's wonderful to see. Linda, I might ask you, how have you seen the open banking transition in Australia, and particularly for those who have seen it in the UK as well? How is it comparing here?
Well, I wasn't in the UK when they launched it, obviously, but look, they had their teething problems too, right? I think, you know, it's a journey, and Australia, I think, had the opportunity of being able to sort of look at what.
Linda, we're having some problem with your audio. It's dropping out a little bit. It's fine when you
sorry.
lean forward. It's okay, no problem.
I feel like I'm totally in the camera if I lean forward.
Yeah, when you lean forward, it's good and we can hear you. We don't mind you being in the camera.
Sorry, I don't know what you got from that, but I think Australia's had the opportunity to sort of at least reflect on the UK implementation of open banking to a degree. I would agree with Demir, you know, that actually we're taking a slightly different approach. I still would say that actually there are things, and it's, you know, it's not there yet. There's still things where we could, you know, it's been a I think a struggle, and I think there's always been, you know, and all the banks are heavily involved, but, you know, and they've got their sort of pros and cons of how they want things to work. Centralized data regulator, you've had the ACCC sort of managing things. You know, I think it's not an easy process, but I think if you focus on the actual purpose of what we're trying to do here with open banking, and not just sort of for I think Australia could be a leader in this. You've got to sort of look at kind of what's then going to happen with the rest of the world. That it's important to get it right. So it's still a journey. I mean, in terms of Vault, we have constant conversations, and it's certainly sort of defining how we build things. We want to certainly kind of leverage categorization, etc. So yeah, look, I think things are moving in the right direction.
Okay. Just to that point around paying attention and doing things well, Chris, you've mentioned before the importance of attention to detail and sweating the detail. Could you go into detail on that, please?
I thought you were asking me to pay attention in the teacher in the classroom sense. Yeah, look. You know, I got some good advice before I kicked off this whole Covagenics thing, and it was from a guy who's super successful. Started a anti-spyware company that he sold to Symantec. Then he also used a very small part of that money to start another massive startup, and very successful in Australia, which was a global job platform. So, you know, he said, one thing he said was sweat the detail, and I guess, you know, I think most founders are like that. Demir and I have often talked about this, and you know, there's a natural proclivity for a founder to sweat the detail, and similarly, if you're someone who sweats the detail, then you have a natural proclivity to actually be a founder. So. As it kind of pertains to us and our kind of success, I'd probably say, like, you know, that ability to, you know, when you're doing 1,000 things, but really to, you know, do what Linda was saying and focus on the customer. So that means you're continually making decisions and continually improving what's already there. You know, to the extent that it's got to really be, you know, part of your NDA within, and India in the business, yeah, you know, so I think that's kind of that's a critical part, and then if you're in a complex industry, which we all are, like it actually it kind of extends further, and what it kind of means is like for you to actually achieve what you need to achieve in a regulated industry, then there's a ton of detail that you've got to have to sort out on your licensing side, on your governance, risk, and all that sort of stuff. And you know, you have people who are really good at sweating the detail on that side of the business. You have really good commercial partnerships people who are really flexible, but not just so high above it that you end up with, you know, a commercial structure that doesn't really work. So, you know, that's a really important piece as well. And then, you know, it trickles down to, you know, for us, we as an example, you know, we had a pretty sizable customer support team. As I was saying, we're B2B2C, so that means we're taking on every single part of it. We're licensed in 60 countries, but we're also handling all the claims and all the payouts, et cetera, doing all the customer service. So, you know, as what we've had to kind of build, you know, from the early days onwards, is that expectation that everyone's contributing towards improvement. And that what that means is, you know, CS teams are the ones who are creating content tickets for us, or CS teams are giving us advice on product construction on the insurance, which isn't their forte, but we want to have those open avenues, because continuous improvement actually really kind of ties into that need to do to sweat the detail, to use that expression. I do think it's absolutely critical. And we see it at all levels in the business. But if that's I think it's a hallmark of it's a contributor to success.
Beautiful. Thank you very much. I saw that in the notes for this, and it makes a lot more sense now. But good advice. There's talking to that point about getting the right people at the right time as well. There was a question from the audience for Demir and Chris. Or anyone else that wants to jump in. Good advisors are hard to find. How many advisors have you had to rely on to negotiate with companies like NAB, Reinventure, and other institutions when bringing them on as investors, partners, or customers?
None.
Explain.
Chris, when things get really tough, I call Chris, and then he's always got a good joke to crack. But no, look, I think I've been down that path, and it never felt natural, to be honest, in terms of engaging advisors to help broker deals. Ultimately, because they don't have their skin in the game, and kind of, you know, there's a lot of people out there that want to give a lot of free advice, but at the end of the day, you're going to have to wear it. You're going to have to kind of see it through. So you really have to kind of find out what's right for your business, and, you know, how you want to kind of structure deals and so forth. And you have to be creative, particularly when engaging with the larger organizations. So for us, like every other kind of founder, you learn through mistakes. So the first kind of few deals were quite crappy, and then you learn your lesson, and you realize that, it's not about the license for the software. It's the time you're going to spend going through all the meetings and so forth, and you work out how to kind of price and structure things appropriately. So, but in saying that, we've got a phenomenal board. I think that one of the interesting things is that our board members, they do comprise of the individuals from the banks, is they actually, when they hired these guys, that, you know, when they said, okay, we're going to launch this venture fund and we're going to do something about it, they actually hired from outside. Which I thought was quite interesting, because I think it's a bit of an admitting that, hey, we can't necessarily do this on our own, so we're going to go and hire the best. And you know, they ended up going as far as hiring people from the US to come over here who's had a lot of VC experience, and have worked with large organizations and startups as well to kind of help broker that. So we've got, from our point of view, we've been quite fortunate that we've got a very supportive board that we can kind of rely on when we have to. But as I said earlier, I think learning from your mistakes is always the best way.
Yeah, look,
go ahead.
I think, I mean, you know, to put a bit of kind of meat on the bones of what I said, you know, there's, you do obviously receive advice. The best advice you're going to get is from people who have skin in the game. I wouldn't go and seek an advisor. I wouldn't engage an advisor either. You know, yes, we had good counsel, you know, so you get a good lawyer and you're going to get counsel, you're paying for that, you know. I wouldn't take it on an equity basis, and you know that's the skill of a good lawyer. But and similarly, for us, we have a really rock solid chairman who's from London Insurance Executive. He's chairman of Sun Life Canada. You know, Liberty, the largest South African insurer. He used to run Old Mutual, which is a listed mutual insurer in UK. So, you know, I mean, he's been tremendous. But you know, would I call that advice? I would assume that the question is talking about actually kind of, you know, having someone in a specific advisory role. That I don't think is the best thing. The best and probably and absolutely undoubtedly the best advice that you can get is, for me, it's from my co-founder, or you know, as we've grown up, our exec team. They're by far the best, and also backing yourself. So you know, no one goes into this knowing everything. You got to learn things pretty quickly. Sometimes you learn the hard way, but it's never too expensive.
Okay, let's go down that path a bit further, Demir. In terms of the kind of startup ecosystem that surrounds you and maybe has helped or not your journey over the years, could you talk a bit to that and what you've seen?
So there's no doubt about it that the startup ecosystem in Australia has just been going like that. I think in terms of support structure, in terms of organization, in terms of kind of alignment, and maybe that's a bit of a cultural thing as well. You know, Australians always love to help the underdog, and I think that through these organizations, there's no doubt about it, there's a flood of support. So we have obviously we've got Fishburners, we've got Stone and Chalk, which is like, you know, started off as I think a bit more focused on fintech, and this kind of since kind of expanded to be a bit more general. Then we've got associations like Fintech Australia, we've got RegTech, and we've got, Chris, have you started InsurTech yet? Have you done that yet? Okay, cool. So there are quite a few there are quite a few kind of great support structures to help out. And we find them great because what they're able to do is they're able to kind of pull in people from overseas, good kind of contacts, organize kind of speakers. I mean, I had an opportunity to meet the head of Google Pay, who came over from the US, and kind of we formed a bit of a relationship, and that's been fantastic. And it's good to know that you know, you can kind of do that. If I was to reach out to him on LinkedIn, maybe he would have responded, maybe he wouldn't have, but you know, the opportunity was actually created. And it's also a good kind of hunting ground for the VCs as well, because they've got a single place to kind of tap into. So you always have that exposure of VCs kind of walking around, and you always get kind of airtime with them as well. So if you're kind of looking for capital, they're always there kind of ready and willing to talk. And if you don't have a contact, it's very easy. Everybody will give you kind of time of day. So I think it's good. And then it's definitely kind of growing.
I'll just say quickly, I think that's one of the best things about Australia is we're a big place, but it's a small number of people, and those people are relatively tightly knit. So as soon as you start to build your network here, you're only a node or two away from whatever you're looking for, particularly if it's anything to do with the startup ecosystem here. Asha, I'll throw to you next. Could you talk a little bit about understanding the consumer landscape in Australia, what you've learned along the way, and what might help others?
Yeah, I mean, I've seen quite a few UK fintechs or just startups in general maybe come across, and sometimes maybe slightly misjudge the consumer landscape in Australia, I guess, particularly B2C companies, speaking from experience, but I'm sure guys who've worked with, you know, B2B as well might have experienced this. And, you know, as Linda said, maybe it's apathy towards some of the financial tools. But I guess, you know, in places like the UK, the fintech boom, you know, very much started out of GFC, some sort of frustration with the existing financial system. and then it all sort of gained speed into this, anti-bank sentiment, which, obviously the government was happy to encourage with, challenger bank licenses and stuff like that. In Australia, the curve is slightly different. I mean, obviously on a regulatory side, we've got many people who have worked on the open banking initiatives, some sort of new CDR initiatives. But I guess in terms of the consumer landscape, perhaps not everyone, although they are looking for, competitive choices, they've always lived their life with, 4 big banks. And, these guys offer all the financial services. And I think moving away from that, maybe for the early majority, maybe they've caught on to some of these tools yet, but I think for the mainstream in Australia, not quite yet. And given that overall it is a relatively small market in population size, although a high income one, I think you just gotta, temper your expectations and maybe of what you hope to take, I guess, in terms of traction once you hit Australia.
One
Not sure
thing,
Yeah,
one thing interesting, Asha, has been the buy now, pay later sector in Australia. I mean, talk about challenger to banks. That's I think we've got 2 huge players in Australia that have outgrown the country and have kind of gone outside to UK and US and other markets as well. So I think that's been an interesting observation from me personally, in the sense that, and I've always kind of thought that it has to be something different. You can't kind of do the same recipe going forward. So, but anyway.
Yeah, I think some of the dynamics of some of these products work well in Australia, buy now, pay later. And I guess some of the dynamics, for instance, some, I don't know, property platforms, for instance, in the UK, equity crowdfunding platforms, they don't seem to have quite the same edge coming over in Australia, just because of market dynamics. But again, as Damir pointed out, buy now, pay later probably punches above its weight in Australia compared to other, I guess, Western countries.
Well, I mean, that's probably because it was invented here in a sense, really. Like a firm was started around the same time, but their model wasn't to do retail; they just focused online. Whereas, Afterpay and Zip was a lot slower to get through. But Afterpay really invented the category. So if it came from here, then Australians consumers are, ahead on adoption, but the rest are catching up.
Yeah. But I think that's also kind of quite interesting, is that one of the things kind of traveling in other kind of areas that we would always kind of consider to be technologically advanced, and then when we come home to Australia, realize we are significantly technologically advanced. So everyone's got the latest iPhone, everyone's got the latest Android. We are huge, huge tech kind of consumers. And I think one of the things that I found quite interesting is kind of just over time, not being from financial services, being just purely from an engineering, working on in different sectors and coming into it, was that just the kind of transition over time where the big thing was always about interest rates, was always about like, move your money over here and we'll give you X% or whatever. That's changed in Australia. That's not what companies are competing now on software features. So the banks, the financial services, all like, I've got a software feature that does this, I've got a software feature that does that. And consumers are being skewed by that. They're like, oh, I want this app because it's shiny and it gives me this kind of functionality. So I think that's quite interesting. So I think definitely for technological companies that are really heavy tech and can provide something unique, I think there's definitely an appetite for it here locally.
Can we dig into that a bit deeper? I think you've seen the delegate list, all of you, hopefully for everyone that's taking part in this. Do you want to talk a little bit to what you could offer some of those delegates, perhaps, to give them a leg up in being competitive in Australia when they land, for those of you who can?
Yeah, that's an interesting one. I think one way that I would look into it is you don't have to start from ground zero, and you can kind of partner. And I think partnerships are definitely quite important. But partnership in terms of complementary technologies, so someone that can benefit from having your technology locally here. For example, for us, we provide open banking API services. So anybody who leverages that particular kind of technology or needs it, we'd be more than happy to kind of partner. And that partnership would I guess as part of that, we'd be kind of able to open up doors for you, introduce you to the appropriate kind of VCs, other kind of banks, institutions, or any of our customers that might benefit from your technology. Because to us, it's a win-win. So the more you succeed, we succeed as well. So I think that that's definitely kind of quite important. I wouldn't necessarily come in. I've seen other international companies come here and say, hey, they speak English, we speak English, it'll just work. It doesn't. It's different laws, different regulation. It is a bit of a tight-knit kind of area. So you do want to kind of go in with a partnerships a strategy and then kind of expand from there.
Anyone else?
I was just taking a look at the list, actually. Sorry, I hadn't I looked at it before now. But I recognize some of the names on that list, actually, and we're talking to some of the people on that list. Others, I don't know, but it seems like quite a varied list in terms of sort of offering. But, you know, I agree with everything that's being said. I think the other thing to do is sort of not just sort of partnership and your go-to-market strategy, and understand understand the competitive landscape, like what are, you know, what are people doing here already, and how do you differentiate in the first instance before you think about how you best go to market.
Beautiful. And I'm sure you'd all be happy to take meetings with people that want to dive deeper into the market that you're addressing, or the technologies that you have.
Yeah, or even sort of more broader interests if they've already identified people.
Okay, beautiful. I'm sure Luli and others will distribute contact details to make that nice and easy. We've addressed regulatory landscape, competitive landscape, consumer landscape, and the startup ecosystem. One thing we haven't touched on, and I'll open this up to everyone, is your experience with investors in Australia. And how you've raised funds in the cases that you've raised funds. Do you want to talk a little bit to that? Dive in, anyone?
Yeah, happy to take that on. We're a Series D company. We've raised 25 million in the last 6 months. Last 9 months. And as I mentioned earlier, you know, we were bootstrapped for the first 3 to 4 years. We had private money coming from London insurance execs, including our chairman, who led very small early rounds of only 1 to 2 million each, and only 2 of those rounds. So, you know, the best thing about that, I think, probably just to kind of just to digress a little bit, best thing about raising not that much money is it allows you to focus on the business, right? If you raise considerable amount, then you're really just, you know, that means that you're going to burn if it's a considerable amount, and you're going to be focused really on raising money. So as a CEO, you know, you have that opportunity to really limit your expectations and potentially your horizons to what's actually addressable within a short period of time. We were lucky that we had big partners, so, you know, we had to just focus on execution. And then, you know, insurance is a pretty good industry. It's a bit of a cash machine. It's like you sit under a money tree and you shake a branch and there's money over there, there's money over there, there's money everywhere. But I think, like, in a sense, in your early days, the less you can take on is actually a better story to be able to produce out of it, and just allows you to focus on execution. So in terms of kind of our story, is a little bit out of date now, because it was 6 years ago, 6.5 years ago when we set up, right? So we first went shaking the tin in 2015. And you know, we had basically, you know, a signature, a tiny little bit of traction, right? So, you know, in Australia, the VC understand insurance. They've made a few insurtech investments since, you know, I like to, one day it'd be nice if they sent me some chocolates for teaching them everything about, you know, insurtech and insurance, so they can make some of those investments. They, you know, they didn't really get it, quite frankly, and that's why we raised from London insurance execs, right? They understood it, you know, oh no, what's the proposition here? How does it disrupt insurance? Okay, I'm in. So once we went to London and stopped trying to kind of shake the tin locally, then that's when, things started moving, and we moved quickly through those seed and Series A stages with very small raises. And I think that, that we're definitely kind of been an advantage because of that. But, things change, you get bigger and people, they don't need to know everything about insurance, but they understand what you're doing. And then, the tech theme matters more than, the insurance theme.
Was that your experience too, Demir?
Yeah, look, I think the Australian investors, I have to be careful. I love my investors, but I think that, look, I think definitely mentality-wise, we've got a long way to go. There's we need to look at I've always said that you need to look at where the majority of the people are employed in Australia, and the majority of them are with big banks and government organizations. Is definitely kind of where the mass kind of employment kind of comes from. And that creates and forms and shapes a type of thinking and type of kind of culture and so forth. And there's not something that's kind of, they've always found kind of quite strange is for a young country that's meant to be kind of growing and kind of proving and kind of and going forward, we have a very risk averse culture. I have US investors hounding me, like spamming the crap out of me all the time, wanting to talk, wanting to do the second meeting and the third meeting and stuff. And I have 0 Australian investors doing that, which is quite interesting. And we play in the actual local market, and that's because they get the space, they want to participate, they want to play, they want to kind of roll the dice. A lot of the investors here, I've always found it quite strange when I go and talk to them, and they're like, oh, but how much profit did you make? And I'm thinking, well, if I made profit, I wouldn't have to talk to you. Like it's kind of like this. It's kind of like, but we've got growth, and they're like, yeah, but like it's just this really risk averse type culture, and there's no doubt about it. I kind of suggested earlier that there are making kind of smart decisions. They are bringing the guys from overseas, and there are kind of ones that get it, but there's a lot that just don't. That just want to kind of wear the VC hat but don't really kind of get the whole game and just want to go into kind of safe bets. I found that kind of working with overseas ones just so much more easier.
I have to ask that question of Asher. In terms of risk-averse audiences and what obviously you're involved in, have you found that to be a problem in Australia?
Yeah, I mean, I'm not sure. Pre-Series A startup raised about 1.5 mil early on, but I'm not sure whether that's just because I'm terrible at raising money. But yeah, we've been bootstrapped for maybe the last 6-ish years. We've got American investors as well. I think the first big check came out of Blackbird Ventures out of Sydney when they were a small, new $20 million fund. I mean, there are definitely good investors in Australia, definitely very, thin number. And I guess, as Demir said, that the risk appetite is quite different. Thankfully, we're not restricted for, I guess, who you can speak to and where they are. So yeah, I think usually it's Australian investors like to invest into Australian, startups. They just want to be close to the action. But yeah, there is a lot more further afield. I think in terms of the investment, you probably wouldn't start or look particularly in Australia for growth. But I mean, if you're here already, then I guess it makes sense.
Yeah, I'd echo that sentiment. I think that VC landscape in Australia is a relatively small number of people who suddenly have a lot more money than they used to have a couple of years ago, which allows them to write bigger checks, but it doesn't make them more competitive. So they're still not taking on more risk, I think, in what I'm seeing, but hopefully that changes. Andrew, you've joined us.
Yes, I have. We've got about 10 minutes left, and I wanted to get a couple of questions in as well that have been carrying over from some of the other sessions. I hope you don't mind. And it goes to what you've been talking about, which is the maturity of the investor community, but also the conservatism that is here in Australia. We know Australia is a very conservative environment, and then research. I'm looking at each of the panel members, and they've got years of experience now. Relatively, they're very experienced in the fintech space because it's still a young space. But Murray, and you could answer this as well, is the quality of research that's now available for companies that are looking to start up in a community now compared to say 5 or even 10 years ago is chalk and cheese, I suspect. How much research, Murray, are you advising young fintech startups at UTS when they're coming out and they're thinking, look, we want to go to the next stage. We think we've got a really good idea. We've shown it to you. You think, yeah, it's got a good idea. What's the next step in the researching space before they, really start committing to some resources and time, and then possibly go out and get their first seed of funding?
Good question. I'd say there's two lenses of that. There's the entrepreneurial lens, where you can research things a bit too much and turn yourself off an idea that might turn out to be a wonderful idea. I encourage people, but I don't encourage them too much. And from the UTS lens, from the kind of university research angle, I will point out Australia has incredible academic institutions that are massively underutilized. They're hard to penetrate, but they're full of talent, and whether it's AI or quantum or data or other kind of things that are relevant to fintech, I think there's massive opportunities for people that can find them in Australia that might be easier to find in other parts of the world with more porous academic institutions. So I think and the R&D tax credits in Australia and the incentives for collaborating with the universities, I think there are research opportunities for people that need that kind of thing for their companies.
Okay. Can I ask then, therefore, a couple of the panel members what they would do differently research-wise than when they started maybe 5, 6, 7 years ago? Because to me, it appears that the research is really valuable. It's money well spent. Damir, would you have done more research when you started? I mean, you obviously had a lot of success, but would you do those initial soundings and research differently now than you would have, I don't know, 7 or 8 years ago?
Probably not, to be honest. I think that I love the expression that Mike Tyson saying, everyone's got a plan until they get punched in the face.
I love it.
And I think, like, I find the same as well, to Murray's point, kind of over researching and, maybe kind of talking yourself out of an idea. I think that the best way to go is just to kind of get it out there, put it in front of the first customer. And I keep telling, it's something likewise that I tell my team as well. Everything that you ever think of is just one big fat assumption until you put it in front of the first customer. And then the customer will tell you whether you actually got it right or wrong. And I think that that's the best form of research. So I think taking some of those whole kind of, startup type principles of kind of like, I had someone approach me the other day. He says, "Oh, I want to build a business. I want to do this," and he's got this long plan. And I said to him, "Stop. You've got 30 days. 30 days. You have to put something in front of a customer, and that customer is going to tell you whether they're going to give you money or not give you money. If they're willing to give you money, you've cracked it. Move along, go to the next one, and so forth." And I think that's probably the best way, kind of going forward now. Obviously, it will kind of vary depending on the industries that you kind of want to get into. Obviously, finance, there is this.
I was going to say, yeah, Linda, as an investor and somebody that's in banking, how does that work for you? How much research do you guys do before you start putting time, resources, and money into it?
Look, I think I'm going to say a couple of things. I totally agree with Damir in terms of the investor community at the early stage here. There's much more maturity to, it has matured over time, but there's a lot of, it's hard and it shouldn't be that hard. So you've got to ask yourself, why is it hard? And I think there's a lot more sophistication and depth to be achieved in the angel community. I think there's a lot of high net worth individuals out there. There's money here, but why don't they invest in startups? Well, I think connectivity is an issue. Two, the risk element again. They've got their money in property, superannuation, all listed equities, and they make a great time. Why would they want to risk it? So the incentives are probably better in the UK around early stage, but still, I think that there's still opportunity here. VC. Very much later stage here. Again, as Damir said, they want to see traction. That's not venturing, So that seed raise is hard. I think there's some great businesses here. And look, I'm not averse to businesses looking to foreign investors either. And it's great that some of the guys in this panel have got, and let's welcome them in. What we want is actually businesses here getting funded. you know, and employing people and jobs and everything else. That's what we want. I don't want to paint a poor picture of the investor community for the people in this session, but there is money here, and I think there are definitely steps being made. The other thing I would say that I would like to see more of, which is not yet there yet, is I think I'd love to see more corporate sponsored accelerators at the early stage. Do you know what I mean? And not a cash for equity arrangement. Do you know what? It's an investment, and it's not a predefined outcome. It's like, actually, you know, we've got this strategic innovation priority. Come in, let's co-create, let's build, and let's just see what happens at the end of it. And you might then be an investor, a customer, a partner, a distributor, do you know, whatever. But people try and structure things and they try and make it hard, and it's a bit of a David and Goliath scenario. And I think, you know, it's kind of done better in other jurisdictions. And you look at financial services in London, there's so many corporate sponsored accelerators there. And how many are there here? So, you know, that's an opportunity. And I think we'll hopefully see more of that.
But do they work, Linda? I don't know.
I think they work if they're, I saw a really good one in Israel actually called The Bridge. And I think what worked really well with that one is they actually, it's more about kind of building something, right? And you're open to it and you invest it and you pay for it. And they actually had 3 corporate partners. They had CNN, Mercedes, and Coca-Cola, completely different industries, but they weren't competitors. But actually, you know what? They had similar problems. And it's like, we've got this problem and we want to solve it. So who's out there trying to solve it? Come in. Do you know what I mean? So
really going to go in there and solve their problems for them? Isn't the idea the antithesis of that? You actually go and do things that actually take money away from
no. I'm talking about this I'm talking about this for a B2B, like a B2B. Do you know what I mean? Like this is kind of, they're trying to solve a problem together.
So you don't engage with Coca-Cola through this channel. Yeah, I mean, I've seen a lot of it in insurance space. I haven't seen, I've seen all sorts of big corporates and their various accelerator programs or innovation hubs or venture capital efforts. I think the only one that I've seen that actually works in insurance space, at least, is where they go and write a big fat check and go, we'll do some strategic partnership later on. We'll do that, and then it never happens, and everyone goes, cool, I'm glad I got the check out of you, but you know. Yeah. And by the way, you wrote a bigger check than everyone else who was talking to us, and you paid a higher valuation because, you know, you're a bit out of it. You're not actually all that good at VC, and what you are good at doing is sitting on massive wads of cash. And thank you for your money, but you know, strategic partnership rarely comes through. It actually ends up often being a blocker to their growth. So I think
that's why I don't think it should be cash for equity accelerators. Do you know what I mean? Like I just have a real issue with them. But also I think what I'd love to see is actually large corporates, their corp dev teams investing early stage alongside VCs. Do you know what I mean? You don't see that here. Again, you see it elsewhere. And also in things that are not just complementary to core business, that are actually in things that are going to disrupt their business. You know, you don't see that a lot here either. But again, you know, opportunity.
The good news is we're going to talk about this in detail tomorrow, Linda. You're actually, I think, on that session tomorrow, aren't you?
Oh, there you go.
So Chris, we're going to get stuck into that one. I did have another question for Murray, which is, sorry, Chris.
I've seen lots of variants of that in my industry. I can talk about that.
Yeah. And Murray, I did want to ask you, and because we've only got a couple of minutes, the themes that you're seeing in fintechs now coming out in Australia compared to, say, 2 or 3 years ago, has there been a change in the themes that you're starting to see now in Australia that you know, some that are coming into Australia might want to be aware of?
Just kind of rapid maturation, I think, is all I can really say. That 5 years ago, there was a lot of people thinking they could do something, and then people walking in saying, we're starting a bank, and okay, good luck, and blah, blah, blah. And people, it was more of a kind of fresh thing. Maybe that was just my perspective. But I think the maturity of talent and companies and investors and people that want to partner with them, and this what you can find around Sydney in particular, has this increased massively. So it's still not what it might be in some other parts of the world, but it's got a unique flavor and I think a unique opportunity in the market that is Australia as well, and the regulatory environment that is Australia. So I think if you wait for everything to make perfect sense, it makes perfect sense to everyone else as well, and you won't get a shot. I think if you follow the trend, you want to get in now before it becomes a really kind of mature, advanced market.
Chris, is that the case in insurance and insurtech? Because I remember running insurance innovation conferences several years ago, and everybody was just starting to talk about it. Where's it now in insurtech?
On what side? Sorry, Andrew. On the
where are the latest developments in insurtech in Australia? Are you seeing it maturing, and are you starting to see a lot more maturity about that space?
No, I mean, it's a huge industry. It took 600 years, and the insurtechs are 3 years old, right? So it's
long way to go.
It hasn't even scratched the surface. Not even.
Excellent opportunity there.
I can't tell you how insignificant the insurtech premiums are compared to the industry. But should software companies be inheriting? Should they be putting their stake in the ground and establishing themselves as the future of insurance distribution? Absolutely. Do traditional insurers or incumbents, how do they go about, what's the quality that they go about? You can't underestimate the value and power that their incumbency has as it is specific to insurance. I think the relationship's a bit different to banking, because banks don't pay you. Yes, they pay you, interest, but anyone can pay you the interest. Doesn't matter what the shingle, on the sign says. But insurance, there's a lot of discretion that the insurers have about whether or not you're going to get paid. So if you're a big A-rated insurer, that really, really matters. There's been kind of non-tech insurers popping up, and that they've been dragged over coals by ACCC, etc. in the last 10 years. Can insurtechs provide a better user experience that addresses massive problems that are structural, like underinsurance? Absolutely. So is there a massive role for insurtechs to play? Absolutely. Is the way to do it by going and sustaining the incumbent by providing their software to the incumbent? Absolutely not. I think that insurers need to be much more ambitious. It's an enormous amount of premium that's out there. I consider it all open for grabs, but it's going to take a very strategic, very good product, but a very strategic approach to what you're going to do and how you're going to go about it.
Fantastic, Chris. Thanks. Finally, Damir, I'm going to wrap up with you. Open banking, huge opportunities there. Obviously, you see a lot more coming into that space.
A huge opportunity, definitely. Look, there are obviously a few international players trying to get into the market. The reality is that open banking still has quite a long way to go. So they've kind of, I'm not sure what the expression is, but they're here, but the capability is still not available yet. So I think that that's kind of been kind of good and bad. The other part is that the banks themselves are finally opening up and looking and scratching their head and thinking, well, how are we going to use this for my business? And that's opened up a huge market opportunity for us, specifically because, they haven't had to do this before, or they've been kind of avoiding, kind of hoping it'll kind of go away. And now it's here. The ACCC literally took their hand, put it behind the back and said, you're going to open up your data to everyone. And now I guess through that opening, they're also kind of thinking, well, I need to consume it, because if I don't, my competitors will, the vaults of the world will, and they'll run circles around me. So they're all trying to work out, well, what does it mean for my business and how that's going to kind of evolve. So we see that as a huge opportunity and a huge kind of precursor. But one of the things that I said earlier is that it's not just open banking in CDR, and I think CDR is a phenomenal initiative that's very unique to Australia, and it's going to open up a lot of opportunities.
Fantastic. Look, I'd like to thank all of our panel members tonight. What a great panel of talent. There's been some lovely stories there, some great insights, a few war wounds. and it's been a really interesting session for our participants. So thank you so much for giving us your time, giving us your expertise, and we hope to see you soon in life and in 3D, which would be lovely. Thank you all again. Murray, thank you for chairing that session, and hope to see you soon as well. Thank you.
Cheers.
Thanks very much.
Great. So that just leaves me to wrap up another great session. I hope you got a lot out of it. Some good questions there. Tomorrow, it's the final session of the Newfound Virtual Market Mission, and we're going to get ready to pitch, which is going to be really important. We're going to hear about all the things that you need to get yourself funded, but also how you're going to pitch for that funding. So really good sessions, and we're going to combine it into one big session. You're going to hear from Stone and Chalk as well, and then getting ready for pitch day. So with that, ladies and gentlemen, I'd like to thank you for being here tonight or this morning, as the case may be. And I look forward to seeing you tomorrow at the usual time and get ready for your pitch day. Thank you.